good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Aisha Faridi, and the overall texture of the market is pretty much similar to what we saw for the last 2 or 3 trading sessions. We start off okay, and from there there's a big tumble, and today in fact we went below the mark of 50-day moving average. Managed to recover just a smidge from there. So we are very precariously placed right now as far as the market mood is concerned, and across the board, whether it's the mid cap, which has seen a downtick of over 2%, to the Nifty Bank, which is down 1.25%, there is that definite weakness across the board. India VIX, that's been the reason why we have seen this big volatility in the markets. That's managed to surge from a 5-week low all the way to a 15-month high in a matter of just 8 to 9 sessions. There have been a solid surge of almost 70% in the last 8 to 9 sessions, and that's something which the street is watching out for. It's heavyweight like Reliance, HDFC Bank, ICICI Bank, which is dragging the market right now. What's clearly holding up is only FMCG, Aisha, and that's the entire, thesis around that rural recovery, which is actually playing out.
Oh, yeah, absolutely. The commentary from the management so far, especially Dabur, Marico, GCPL, or for that matter, even Britannia, seems to be indicating that the rural recovery is very much in place. Volume growth, the outlook has been extremely strong from then. And, the fact that they've indicated that even pricing power is now coming back to the FMCG majors. So very positive commentary, and that's clearly reflective on the entire space today. I mean, pick up Unilever, which is the top Nifty mover today. That's almost surged 5% in an otherwise very weak market, one would say. Britannia higher by 2%, Nestle up 1.7%, ITC holding up 1%, even though it's not a pure play FMCG play. Marico has been a 9% gap up move from the word go, continues to maintain its pole position. Dabur holding up 6%, GCPL up 6%. So you can't really pinpoint any red within the FMCG pack. But that's not quite the case with the rest of the market, like Anisha was flagging off, which we will discuss with our chartists and fundamental experts as well. But look out for Titagarh Wagons too, because Morgan Stanley has now initiated coverage. They expect a 28% earnings CAGR over FY24 to 27%. So that stock as well has been very buoyant from the word go. Indus Tower, Macquarie, a downgrade coming in. They believe that in better visibility, while they do see that, but most of it is already in the price. And remember, the stock has shot up as well and seen quite a fair bit of run up year to date already. So 3.25% of a downtick coming in. I don't know if we can pick up, the YTD or the 1 month chart also actually of Indus Tower, because a chunk of the move in Indus Tower has really happened in, the last 1 month or so. Lupin, the US business, has been below estimates, and one can see that reflect as well in the stock prices, straight away lower by 5%. But let's welcome on board Kunal as well as Nuresh and find out what they're making of the market. We also have Jonathan Shizel joining in to throw in the perspective on what the fundamentals are, which are nagging the market right now. But Kunal, firstly, a word on the fundamental, on the charts, I beg your pardon, because it's almost a daily pattern when the market starts off okay, and in the last 1 hour it completely changes tide, and today it actually happened way before that.
Yeah, and I think one of the major reasons for that, Aisha, is because the VIX is now at 17.5. As compared to that, I think yesterday same time we were discussing, the VIX was almost 16.2, 16.35 odd levels, and in a couple of days prior to that we were almost at sub 15 mark. So this is a very sharp adjustment to the VIX, and that's why you're seeing the sudden reaction, knee-jerk reaction from the indices as well as from the overall market breadth. I would believe that there could be a point where, say, in the next 1 or 2 days, you may probably see some bit of pause in the rise of VIX. If that happens, maybe a near-term bottom could be at play for the indices. But till the time VIX remains above the 14 mark, I would believe that the markets could remain a lot more choppier than what we've seen over the last few weeks and over the last few months.
Okay, that choppiness is something that we need to watch out for. Call it the election fear or the outcome of that. Maybe ahead of that, there's a bit of an adjustment because the phase 3 polling is underway. And if you go by the turnout data, it's not really impressive at this point of time. And that's been the trend in the first and the second phase as well, that the voter turnout was a little lower than what the street was expecting earlier. But let me put the spotlight on FMCG sector particularly. What's the take, Nuresh, within FMCG and even IT for that matter? Both these defenses are doing a shade better than the rest of the markets. What would be your top pick within the two?
We had been in a downtrend for a long period of time. A lot of stocks are available at the same prices they were 3-4 years back also. So if you look at Hindustan Unilever, it is still below the prices where it peaked in 2020. So looks like a bottoming out case. Post the numbers for a few FMCG pack yesterday. Initiated a buy on Marico that has gapped up. So out here now, ITC remains the interesting bet, which is where the stock has been sideways around that 430, 440 mark. So that has some upside towards 480. And on dips, Dabur would be the next bet. So overall, bullish on the FMCG pack, but would wait for a fade off and a little dip to get into these names.
Right, okay. Let me welcome on board Jonathan Shizel as well and find out what he's making of the market. Jonathan, hi, afternoon. Like our chartists were flagging off, a huge spike in the India VIX, clearly a gauge of the kind of fear out there in the market right now. You think all of that could be attributed to the elections which are currently underway? We're already in the third phase of polling, or do you think there are factors beyond that too?
Yeah, no, I'd agree with you. I think obviously clearly there is a level of uncertainty from election risk. I think also in addition, there's probably, I'm sure you've noticed that the Hong Kong and Chinese markets have been quite buoyant the last few days. And I think you might see a little bit at the sides anyway, a little bit of switching out of India into China in the very short term, which could slightly lead to a slight increase in volatility. But yes, it's election related.
The reason of that switch, is it purely because China is available very cheap, or the fact that India has stopped out and there are no fresh triggers per se? What do you think is the reason why FIIs are getting out of India and perhaps into China?
I think you're right. I think there's a valuation. Clearly, there's a massive valuation difference. That said, there has traditionally been a fairly large valuation difference for many years. So it wouldn't be that alone. But I think, clearly the Chinese, Hong Kong sort of universe has been underperforming to such an extent for a number of years that I think a lot of investors probably feel there's a trade involved and therefore book in a little bit of profit out of India, which has been a great trade over the last few years, and maybe in the very short term buy some of these beaten down Chinese shares for a trade, and then potentially when the election's out the way, head back to India. So who knows? But yeah, that's what I would feel maybe is happening.
But Jonathan, within India as well, there are pockets which are a bit undervalued or provide value, and case in point being private banks which haven't moved, the likes of HDFC Bank, Kotak Mahindra Bank, etc. FMCG had not done quite well in the last almost 12 months. Even IT for that matter has been a bit sideways. Yes, it's moved up a bit, but not to the extent of rest of the markets. Wouldn't it be a wise choice to perhaps put in some positions in these sectors?
Yeah, I agree. I mean, you could argue there's sort of some of those sectors are relatively defensive. The FMCG space globally has been pretty miserable for some time. And a lot of the big global players are hoping on India for the sort of growth story in their sales. That's began to perk up globally. So it'd be interesting to see if that will start shifting into India as well, where the stocks have been clear underperformers for some time. And obviously IT and some of the other sectors, Indian IT and outsourcing names, that also follows some of the big US names that have been struggling a bit in the space in the very short term. But yes, like in all indices, there's areas which are doing very well, and then other areas that are underperforming, and therefore for India dedicated investors, there's always something to have a look at.
Where within FMCG, and given the kind of move that you're seeing today, be it Marico, Dabur, GCPL, Unilever, Britannia, even Nestle, IITC, where is it that you can continue to initiate longs and continue to buy?
So I think ITC is very attractive. I think at current levels of 435, 440 on the spot basis, I think it's an excellent time to go for a long on ITC, because the pedigree of the stock is very strong, and we've seen from 500 odd levels the stock had come back towards, I think, 395, 396. That was the low ITC had made, and from there the stock has gone through a gradual recovery. So the chart patterns, the major correction that seems to be now behind, and the stock is already on the positive side in terms of trends. So I think at 435, 440 mark, it could be a very good buy. My expectation is that the stock could probably try and come back to that 465 to 480 odd levels. But I think more importantly, what we are also seeing today is the comeback on a bit of a volumes as well as high beta nature on the FMCG side, and I'm talking of the likes of HUL, etc., which have seen very strong surge of volumes and very strong price behavior to try and complement the volume surge for the stocks. So that indicates that we could be at a cusp of a very strong turnaround. HUL could be the other name. I think from 2200, 2250 odd mark, which was the bottom for the stock in the last few weeks, it's on the verge of coming towards the 2400 levels. I would believe after today's breakout, the stock opens up further room on the upside to levels of 2550, 2600 also.
Right, okay, that's the take coming in on what the FMCG basket is up to. But let's also check in on what's not holding out, because Bajaj Auto has seen a sizable move down, 4.5% lower over there. There's Shriram Finance as well, which is down about almost 3%. Tata Motors, IndusInd Bank, ONGC, Tata Steel, M&M, they're all seeing some weakness coming in. And of course, Reliance Industries, look at the move on the stock. It's down pretty much around the session lows. 1.6% of a dip is what you're seeing on the stock, although it was a lot worse previously as well. And ICICI Bank too, which is dragging about almost 1.6% along with Axis. Naresh, within the composition of the Nifty Bank, where is it that you see acute strength and weakness, if at all you see strength?
So clearly the strength has been in ICICI Bank, SBI and Axis. Taking out even today's move, we are still above the previous highs of 1110 and 1115 for ICICI Bank. So looks very promising. This remains a leader. Then Axis Bank, the last breakout was at 1120. We are still above those levels. State Bank of India, the last breakout was at 780. We are above those levels. So all these three names look interesting. The interesting part is we've started seeing a recovery or a base formation in HDFC Bank. The stock has started holding above 1480 levels for the last 3-4 weeks. And if that crosses 1540, that would be a short-term breakout. Kotak has not seen a follow-up selling pressure. So 1650 remains a pivot level. If it sustains above 1650, it again has a recovery chance towards 1750. So overall, the whole banking space looks interesting at current levels.
Index is interestingly poised. But Jonathan, what about the real estate pack? I mean, today there is a bit of a profit booking on the likes of Prestige Estate. It's down about 8%. Sobha is coming under pressure. Century Textiles, which is a bit of a play on real estate now, just reported its numbers and it looks like it's missed the street expectation because there's a sharp downtick on that one as well by 6%. Within real estate, is it the time perhaps to book profits entirely from that sector?
Yeah, look, it's a sector that we don't look a great deal at because it's obviously a very localized sector, and there are many factors at play that are rumbling around underneath. So you've got to have a good understanding of what's going on in each locality to really get a grip of the sector. But clearly, yeah, it had done reasonably well. I guess that's probably, it is I guess to a degree, quite a sort of election-related sector as well. So. Yeah, it's not a sector we have strong thoughts on either way.
Jonathan, where else do you think that, there is sort of exuberance when it comes to India equities? Any sectors which you may feel are priced to perfection right now?
Yeah, well, it's interesting because, as we were discussing just earlier, previously it was always focused on the FMCG space and the whole story of premiumization in the retail space in India. And huge opportunities there, whereas the reality over the last couple of years, as we just discussed, that sector's been a bit disappointing. I mean, otherwise, the basic consumption sectors, the also in addition, another great sector that I've always liked and will do for some time will be the private sector banking sector, which, as we've just discussed, there's the previous leader, HDFC, has been a bit disappointing since the merger. But I think that sector, for certainly when foreign investors look at India, that's a great way to play the broader Indian market. Yes, there's the HDFC is going through its indigestion of the merger, but it will come out of it eventually. So yeah, look, there's still some very interesting spaces within India available, and we do continue to like the market.
And on that note, we let you go. Appreciate you joining us on the show today. Let's take a short breather on the show, but when we come back, we'll put the spotlight on the FMCG sector and how strong is this recovery going to be in the rural sector.